Alright guys, in this video I'm going to be showing you how to day trade the QQQ. We're going to be specifically looking at the last 3 days and how you could have day traded the QQQ using options, calls, and puts. So first, I'd like to draw some primary levels to go off of. Here's the past 3 days we've had. Both beautiful trend days, a little choppy right here. But if you have enough patience to wait on the setup and you have discipline to follow your rules once you're in the position, you can easily turn a small amount of money into a very large amount of money. So let's first and foremost, if we're going to trade this day, we need to look at the previous day and see what happened. Let's go ahead and chart the highs and lows of the previous day. So here we have the 15-minute chart of the QQQ. We're gonna go ahead and chart. This is the opening price. It's also the high. We're just straight above it, and then the low right here. All right. So here we go. Next day we get a pretty big gap up in the morning. We sell off pre-market, and we kind of open up on a small gap from the previous day. So we open up kind of in this range of the previous day's candle, and in this case we want to see a breakout either outside of this range to the upside or downside. In this case we got it to the upside. Now that we've got our previous day's zones, let's go ahead and chart our pre-market high, which is very close to the previous day's high. Make that a different color real quick. Alright, so now that we have those levels charted out, let's go ahead and get down to a smaller time frame. Alright guys, so right here we have the 15-minute chart on the left-hand side, and we have the 2-minute chart on the right-hand side. So let's look at how you could have played the upside here. So first, we identify a trend. The trend is up. In this case, once we know the trend, we want to enter on a pullback in that trend, and hopefully the trend continues and you profit off the direction. So let's go ahead and turn on our key moving averages. So here we are. Oh, one more thing before I forget, always chart the opening price, just kind of a sentiment gauge to where if we're above opening price you want to probably play calls, if we're below it you want to play puts. In this case we got a pretty big pump right off of the opening price. In the first 2-minute candle we get a small pullback, and then opening price is reclaimed. We get a pretty big upside off of that. In this case we break over the pre-market high and the previous day's high, and we also get the 15-minute close above that high. So at this point we got the 15-minute close right here, and I'm looking for an entry for calls. So we consolidate, turning previous resistance into support. That's very bullish. It's a continuation pattern. So we enter calls right here, and our target would be either a previous resistance zone from the past, or just simply you can just use your EMAs to gauge how long you want to stay in the trade. So in this case, we stay in the trade. You can constantly enter on these pullbacks in the trend. These little bull flags. And we pretty much stay in the trade until the trend is broken. So in this case, we get a 2-minute candle close underneath the 13 EMA. So that would be your sign to get out of the trade. And this trade from here to there lasted, let's see, yeah, it lasted around an hour and a half. So an hour and a half in the trade, the contracts ran about 200% right there at that point. So turn about pretty good return on your investment. So obviously that's a pretty big run in the morning. We start to consolidate a little bit, still trending up, but the option contracts would probably most likely not be as lucrative in this choppy price action. So we identified the trend, we entered on a pullback in the trend, and we simply followed the rules and exited when we were told to. All right, so that is the first day we're going to go over. About a 200% trade right there on QQQ. And here we have the next day. Let's go ahead and clear some of these zones out from the day before. So the next day was a huge down day for the market. Honestly, we don't really care which way the market moved, as long as there's a clean trend. We'll make profit off of it. Let's go ahead and clear out some of these levels. All right, so let's start with the high from yesterday. Go ahead and mark that zone. All right, and let's go ahead and mark the low, which just so happened to be the opening price. All right, now that we have those levels marked, let's go ahead and chart the pre-market levels. So in this case, we had a huge move after hours after NVIDIA, which is a large cap tech name, reported earnings. This moved the index up as well. So we had a pretty substantial gap up in the morning. So the QQQ opened up around 1%. In this case, it looks like a lot of people took profits at the open. So let's go ahead and chart our pre-market levels. Pre-market high, we didn't really use it. Pre-market low, we just sliced right through it. So we'll just stick with the opening price. All right. Now that we've got that, let's go ahead and zoom in on the smaller time frame. Let's move to the 2-minute chart right here. And this was very clean. This was a very clean setup that ran with very fast price action, which causes option contracts to absolutely explode. So right off the bat, we identify a trend. We're below the opening price. We slice through the pre-market low. We have the trend EMAs signaling more downside. They're all in numerical order to the downside. So at this point, we're looking for a key level to play off of and entry. So in this case, previous resistance, we broke below it and retested on the 15-minute chart. That's very perfect continuation pattern. So yesterday's resistance just so happened to be resistance today. We broke through it, retested. Here's a 2-minute chart. We had super high volume, selling pressure, and then volume kind of evaporates right here, dries up on these green candles. Low volume pullback in the trend, retesting previous zone. That's money. So we under puts right here, and our target would be our next key level, which just so happened to be yesterday's low of day, which was the opening price as well. Or like I said, you can play it off the EMA. So we ride the EMA all the way down to this zone, and our target's achieved right here. This trade was a very good trade, very clean price action. The trade lasted around exactly around an hour, and we had a 1.4% down movement in the underlying index, the QQQ. So these contracts ran around 700%. So absolutely insane opportunities in the market. So at this point, that's a heck of a trade. We're done for the day. Of course, we kept selling off. Let's go ahead and move to the next day. So we had around a 200% trade the previous day. We had a 700% trade today. Let's go to tomorrow. Now we cleaned our zones up. Always like to start with a clean chart. Declutter your chart. All right, so here we go. Let's go ahead and chart some levels from the previous day. So in this case, this was a very key zone. You can expect price to have struggled breaking through this zone in the future. And as well as right here, this was another level that we broke and retested. You can expect price to have trouble breaking through there. Let's go ahead and make that a zone. All right, and at this point, we will just go ahead and mark the closing price. All right, let's not do the closing price. Let's do the pre-market levels. All right, so we got pre-market low, and pre-market high. And we will chart the opening price as well. All right, now that we have those levels charted, it looks like we had a small gap up. Here's the closing price of the previous day. Here's where we opened. So we are still in the previous day's range, which is not ideal for clean price action. In this case, we actually had Jerome Powell speaking at 9 a.m., which led to even more choppy price action. Let's go ahead and see how you could have played today. So right here, we open, we chop sideways, and market waits on Powell to talk at 9. Here's 9 o'clock candle. We get an initial pop, we get a sell-off. Looks like we were supported by the opening price. We had a huge pump off opening price, and then we had a major rejection off of the resistance zone from the previous day. So in this case, we had a huge wick off that zone. We actually had a reversal candle on the 2-minute chart, long wick into the zone just to close right back down. Traps a lot of people on the wrong side, and they will get punished for that. So we get our reject off of yesterday's resistance. So in this case, I'm waiting on us to break through the opening price where we had support in order to target puts again. So we break through the opening price. We're breaking through these key levels, and you can enter right here. We get the 15-minute candle close below opening price, and we retest it perfectly. So there's the 15-minute candle close. We keep having these 2-minute wicks into the opening price. And let's go ahead and turn on our EMAs. Yep, perfect wick to the EMA. Enter puts right here. This trade was very short, about really 3 candles, so that's 6 minutes. And this trade ran around 50 to 100%. Like I said, you can write it down to, it looks like we broke below pre-market low and retested it. So we continued lower. And in this case, you just wait on the EMA to break, or you can just simply sell. Looks like we have an extreme RSI reading on the 2-minute chart. We're in the 29s, under 30, so you can just sell right here. Solid trade, and then we continue to chop throughout the day. So yeah, the market presents opportunities every single day. You just have to be patient enough to wait on them, and you have to have the discipline to execute when the opportunity presents itself. So, hope you guys learned something.